Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. All 10 Adani Group stocks end in the red as the sell-off continues. The group has lost more than 10 lakh crore rupees in market cap since the Hindenburg report was made public. Adani Group pledges additional shares worth more than 1,000 crore rupees to State Bank of India. The bank says this is a top-up for the Carmichael project in Australia, as companies are required to maintain 140% collateral coverage. SBI clarifies that no new loan was granted and that the Adani Group has not approached the bank yet for any additional financing. Stock market slide as IT and financial stocks remain under pressure. The sensex loses over 250 points. The nifty is down over 80 points. The rupee weakens over 20 paise against the dollar, moving closer to the 83 mark. Global auto majors Renault and Nissan plan to invest 5,300 crore rupees in India to develop 6 electric vehicles and 4 SUVs. They promise to create 2,000 jobs and want to establish a full supply chain for EVs in India for a competitive cost advantage. Prime Minister Modi inaugurates Aero India 2023, India's largest aviation show. Over 800 companies from 98 countries in attendance. More than 250 MOUs worth 75,000 crore rupees are expected to be inked at the 5-day event. The Supreme Court directs SpiceJets to encash bank guarantees and pay 75 crore rupees to former promoter Kalanthi Maran. Within 2 weeks, SpiceJet lawyer asked for the interest rate to be lowered, says Marans are free to reverse the transaction and take the airline back. A week after a series of earthquakes, rescuers pull out a woman alive from the rubble of a collapsed building in Turkey. The death toll crosses 34,000. Vital aid to Syria is being held up due to disputes between the government and rebel groups. More than 5 million people are estimated to be homeless in Syria. U.S. military shoots down another unidentified object flying at high altitude. This is the 4th flying object shot down by the U.S. in a week. Officials are yet to reveal more information. While the fall in Adani Group stocks continues, all 10 group companies, that's including NDTV, ended in the red today as the rout continues. Group stocks have lost over 51,000 crore rupees in market capitalization just today, taking the total loss since the report produced by Hindenburg was made public. The market cap erosion now at over 10 lakh crore rupees. The group has lost 64% from its peak valuation and 53% since the Hindenburg report. The group has pledged additional shares worth more than 1,000 crore rupees to SBI for the Carmichael project in Australia. Shares that amount to a 1% stake in Adani Ports, 0.55% stake in Adani Transmissions and 1% stake in Adani Green have been pledged additionally. SBI said Adani Group's pledge was used to only top up the collateral and that no new loans will be sanctioned. Meanwhile, the Finance Ministry, in a response to a question in Parliament, has revealed that the exposure of public sector general insurance companies to the Adani Group, that's New India Insurance, United Insurance, National Insurance and Oriental Insurance, have exposure amounting to 0.14% of total assets under management. However, the government statement also added that financial institutions like Exim Bank, SIDBI, NHB and NABARD do not divulge information under their respective acts, and so it could not be confirmed if there was any exposure to the Adani Group. Vivek is standing by with the key developments and the movement in the Adani Group stocks. Vivek.
Well, some important developments that took place and which impacted the stock prices of the Adani Group stocks. First on our list, the ASM frameworks, the 3 of the Adani Group stocks were put into Adani Ports, Ambuja Cements, as well as Adani Enterprises. 2 of the stocks were removed out of the ASM framework, meaning that less margin upfront requirement would be required to go ahead and trade in these particular names. Also, some important action coming in as far as rating agency Moody's is concerned. While Moody's retained its rating across all of the Adani Group stocks, for 4 of the companies where they have rating, they cut the outlook from a stable to a slightly negative outlook. So Adani Green Energy, Adani Transmission, Adani Electricity were 3 of the names where you actually saw the outlook being reduced by Moody's. Now also some important development in terms of pledging activity. What actually happened is that there were additional shares that were pledged by the Adani Group, and this was done in favor of the SBI Cap Trustee. Adani Ports, the pledge has now gone up from 0.65% to 1%. Adani Transmission as well as Adani Green too saw their pledges going higher. So we had, SBI management come on our channel, where they actually said that there has been no new fresh loan being given. Rather, this is a top-up requirement for the Carmichael project, where SBI had actually given a loan as far as the Adani Group is concerned. And in fact, when you're talking about the SBI chairman, we have the management with us, where they've clearly stated, the amount of exposure, as well as, right now, how is it that they're looking at this particular exposure that they have to the Adani Group.
We have an exposure of US dollar 300 million facility that was granted for the Adani Group's Carmichael facility in Australia, of which they have drawn down USD 180 million towards the railroad part of the project, while the mines they have so far managed to complete with their own resources. So there is one of the covenants for this facility is that they should maintain 140% collateral coverage. In addition to the project assets, they are required to maintain this collateral coverage by way of pledge of shares from the three companies belonging to the group. This is not any loans that was granted against pledge of shares. No additional finance was granted against this additional pledge. These are essentially to maintain a covenant that is pre-existing in terms of an earlier facility, which is completely covered both by project assets as well as this collateral coverage.
Well, that's State Bank of India. Now, the Rajya Sabha has gone into recess earlier than scheduled. The Adani controversy disrupted proceedings in Parliament through the budget session. The Rajya Sabha was adjourned till the 13th of March amid protests. Opposition parties are demanding a probe by a parliamentary panel or an investigative agency monitored by a retired judge into the Hindenburg Report's allegations against the Adani Group. Well, let's take a look at the day's trading action. A range-bound session saw the Lal Street end the day lower. The Nifty and the Sensex ending close to 0.5% lower. IT and financials remain the biggest drag for the markets. Mid-caps underperformed the benchmarks, and that index fell 1.5% as weak earnings led to a steep fall in certain stocks. And in the currency market, the rupee depreciated 17 paise, ending at 82.71 against the dollar. A strong American currency and muted trend in domestic equities weighing on sentiment. Oil prices fall after investors see short-term demand concerns stemming from refinery maintenance in Asia and the US. In fact, investors shrugged off the impact of the Russian output cut as it was largely priced in. In a bid to ensure the safety of investor money, market regulator SEBI will carry out an extensive audit of 44 mutual funds. SEBI had also put out an advertisement asking for expression of interest from forensic auditors to conduct these audits. Sources have told CNBC-TV18 these audits will focus on the due diligence and risk management of mutual fund houses. Here's a CNBC-TV18 exclusive. Renault and Nissan are set to invest 5,300 crore rupees to develop 4 special utility vehicles and electric vehicles for India. The alliance, through fresh R&D investments, aims to create 2,000 new jobs. The company's global CEO, Ashwani Gupta, has told CNBC-TV18 that Renault Nissan would like to establish a full supply chain for electric vehicles in India to gain competitive cost advantage. Take a look.
This new chapter in India will be based on our last 15 years of experience, but also the growth potential of India becoming the third largest market. Hence, we decided to invest $600 million or 5,300 crores of rupees in 6 brand new products, out of which 4 brand new products will be C-segment SUVs for Renault and Nissan, and 2 A-segment battery electric. In addition to that, we will create additional 2,000 employment, not only to do the development in India for India, but also doing the software development and the digital development out of India for our whole worldwide operations.
Well, that's the latest on Renault Nissan's plans for India. Time is running out for cab aggregator Uber, which has been operating without a license in Maharashtra. The Supreme Court has ordered the company to apply for a license before the 6th of March. The court has also directed the Maharashtra government to expedite its framework for aggregators. The top court had earlier asked Uber to comply with the motor vehicle aggregator guidelines issued by the centre until the state finalises its rules. Uber had argued that the centre's guidelines are not workable. Flying into and out of smaller airports in India could get costlier. The Aviation Ministry has proposed to hike landing, parking and user development charges at airports, which cater to less than 3.5 million passengers a year. Danish joins us now with more. Danish, what's the rationale behind the hikes?
where if you're planning to travel from a smaller airport, then your air travel is likely to get expensive in a few days, as the Ministry of Civil Aviation has come out with a draft concept paper which talks about a hike in various kind of fees. Well, according to this draft concept paper, the central government has recommended to hike the parking as well as the handling fees by 30%, and the draft paper has also recommended to increase the user development fee by at least 4 times. Well, according to this paper, if approved, the new rates will be applicable to those airports that cater to 3.5 million passengers every year. And the paper also talks about dividing the airports in 3 different clusters. According to those clusters, the cluster 1 will include those airports that cater to 0.1 million to 1 million passengers a year. Then cluster 2 will include those airports that will cater to at least 1 million passengers a year. And then there's a third category which includes very small airports that give services to less than 0.1 million passengers a year. Well, as of now, this is a draft concept paper, and all stakeholders have been asked to submit their recommendations by 20th February. Once those recommendations are in, then the government will take a final call, and these airports will also include those airports that cater to the Udan scheme.
Danish, many thanks for joining us. We will head into a break, but when we return, there is a lot more that we have for you. Stay tuned. The Supreme Court has given SpiceJets 2 weeks to encash a bank guarantee and pay Kalanithy Maran 270 crore rupees and interest worth 75 crore rupees for an arbitral award worth 579 crores dating back to 2018. SpiceJets' lawyer has asked for the interest rate to be lowered and has said that Marans are in fact free to reverse the transaction and take the airline back if they like. Ashmit joins us now with what transpired in court today. Mukul Rohatgi making that argument, Ashmit, but where does this really leave things in all earnest?
Well, it's quite colourful to have Mr. Mukul Rohatgi arguing in the apex court, but short of that comment, essentially the argument that he had been making, that Mukul Rohatgi had been making on account of SpiceJet essentially, is that, look, the interest burden that is being computed is too much, is too excessive, and that's the argument being made. Let's break down the numbers here as far as our viewers are concerned. The total principal amount that had to be paid by SpiceJet to Marans was 579 crore rupees, but that was way back in 2018. Since then, the clock of the interest has been running, the meter has been running, and as of February of this year, Marans have computed the interest amount payable at 362 crores. That's at essentially 18% interest being computed over the last 4 years. Now, what's important is that SpiceJet on its part has said that, look, we've paid 8 crore rupees in cash, the balance 270 we'll pay by way of a bank guarantee. And as far as the interest component is concerned, we would like to argue that, we would like to debate that before the High Court. Now, so towards that end, the Supreme Court has passed 3-part order. The number one is, as far as the principal amount is concerned, SpiceJet very clearly has been directed that the 270 crore rupee bank guarantee needs to be encashed, and then subsequently that payment needs to be made to the Marans within 2 weeks' time. Now, this is something that SpiceJet had been provisioning for, as that was an offer on the table for the last very many years. The second aspect is the Supreme Court has directed SpiceJet to pay 75 crore rupees from that disputed claim of 362 crore rupees in interest amount, and that has to be paid within 4 weeks' time. And essentially what the Supreme Court has said, that this issue of whether or not the interest is to be paid, how much is to be paid, is in fact free to be contested and argued before the Delhi High Court. So that is essentially the broad takeaway from today's hearing. An additional amount of 75 crore rupees to be paid by SpiceJet, as well as, of course, that bank guarantee amount of 270 crore rupees. The larger issue of interest amount, that is to be debated before the Delhi High Court.
Well, Ashmit, before I let you go, the other important hearing that is on in the Supreme Court in the Adani Hindenburg matter, if you can very quickly run us through what has transpired in court.
Well, this was a big-ticket matter that was listed before the Chief Justice's bench. And importantly, let's remind our viewers that on Friday, the Chief Justice has asked the Solicitor General very specifically 3 questions. Number 1, is the current framework enough? Number 2, is there room for, in fact, improving upon this current framework for investor protection? And that is something that SEBI, in fact, had conversations over the weekend with the Finance Ministry. So that was the second question. The third is there room for an expert panel to be constituted? Now, these questions were answered very briefly by the Solicitor General in a hearing before the Apex Court. The Solicitor General appearing for the government said that as far as the current framework for investor protection is concerned, it is sufficiently competent to deal with such shocks to the system and that there's no reason to in fact tinker with that as of this stage. However, the Solicitor General said that the suggestion that fell from the Apex Court that are there any alternatives or perhaps means or legislative tools required to further strengthen the framework? On that, the Solicitor General said that they're open. The government is open for consultation on that. He's even open to a suggestion of an expert panel. However, there are two caveats that the Solicitor General planted in Chief Justice's mind. Number one is that one should be wary of sending any adverse signals to the global markets and to the global investors, and that is something that we'll have to be wary of in case of an expert committee. And towards that end, the Solicitor General had said that the remit of the expert panel should be limited so as to not send any adverse signals, and that the Solicitor General, on behalf of the government, will be the one suggesting names of these experts, and importantly has said that both the issue of the remit as well as names of these experts will be sent in a sealed envelope. These proceedings have now been placed for further hearing on Friday.
All right, Ashmit, appreciate you joining us. We will, of course, come back to you for more developments. Now, there has been a global push for moving towards a greener economy with economists, environmentalists and also tax experts discussing this transition. Surabhi Upadhyay caught up with David Linke, KPMG's Global Head of Tax and Legal. She asked him about the taxation policies, the pillars of G20 inclusive framework on base erosion and profit shifting, along with using taxation as a policy tool for the green transition. Take a look, and thanks for watching Business 360.
Well, protectionism is a risk, is what I would say. But I mean, I think especially with India's leadership of the G20 this year, this decarbonisation and how you incentivise decarbonisation of the economy is a key focus. I know I'm involved in one of the working groups on that. But if I think about how tax policy is used around the world, look, from a European perspective, they've had their emissions trading scheme for quite a while, but there's also been the introduction of a carbon border adjustment mechanism in the EU, which seeks essentially to tax high carbon intensive produced goods as they enter the union. So that's more of a taxation policy approach to, in a sense, drive the decarbonisation of the producers. If you compare that to what's happened in the US, especially over the last 6 months, you've had a key piece of legislation in the US called the Inflation Reduction Act. And all up, I think that included about $400 billion US of incentives designed to decarbonise the US economy. So I think tax incentives and tax policy, albeit in two different approaches, are really used in particular by the EU, but now by the US as well.
Let me actually get to BEPS. I think the move now is to quickly get to Pillar 2. That's where there's greater agreement, which means that countries will agree to a minimum level of basic taxation. What are the expectations from India? As you said, there was no mention of this in the budget, but what is it that the world is looking for as it looks to India on this?
Well, I mean, I think I'm optimistic that there'll still be an agreement on Pillar 1 as well, but let me come back to that. I mean, I think you refer to Pillar 2, which is essentially the global minimum tax approach. Historically, it was an important issue in the European Union. I think they have come out and announced that they will impose their taxes from essentially 2024 onwards, whereby countries will seek to impose a minimum tax.
And it's 15%, I believe.
Yeah.
India anyway has a concept of a minimum alternate tax at 15%.
Yeah, I mean, I think India is well positioned already, given the minimum tax rate. But I think there's a number of issues associated with the global minimum tax that countries are grappling with. Not solely an Indian issue, but for example, how are incentives treated?
Right.
But what about tax holidays? What about special economic zones? What about other types of incentives as they're considered by the global minimum tax arrangement?
Let's talk about Pillar 1 then, the base erosion, profit shifting concept. India has gone its own way by charting out the concept of the significant economic presence or the equalization levy. Do you see this path continuing, or do you see BEPS as a group moving a little more quickly to streamline how these digital global MNCs should be taxed?
I think there will be a resolution, and I'm confident there will be. It may just take a little longer. I think India led the thinking in terms of taxing the profits made from the ultimate consumer. That market-based approach to taxation, which was seen as the problem, not only in the tech space, but more generally, especially when you have a market the size of India's, an incredible, base of consumer
Huge
power.
user base.
Yeah, absolutely. I think this move away, from seeking, an existing physical presence in a country is a thing that will go by the wayside in global tax terms. I think the Indians moved quickly on their equalisation levy. They've now got a concept of significant economic presence, which actually doesn't require people on the ground in India to generate that presence. And so I think you will see more of that going forward.